I have made more money in my life by snoring than I ever have by trading. I've spent the last 80 years watching people in the financial world, and I've noticed a very strange, almost tragic pattern. People wake up every morning thinking that if they aren't buying something, selling something, or reacting to a breaking news headline, they aren't investing. They treat the market like a casino where they have to roll the dice every single hour just to feel alive. They think activity equals intelligence. But I realized a long time ago that the stock market is a device for transferring money from the impatient to the patient. And the act of investing, the motion, the noise, the graphs, is usually the enemy of your returns. Let me tell you a story about baseball that changed how I see the world. There was a book I read years ago called The Science of Hitting by Ted Williams. Now, Ted was arguably the greatest hitter who ever lived. He didn't just swing at the ball, he studied it with the precision of a surgeon. Ted carved the strike zone into 77 little cells, each the size of a baseball. He learned a simple mathematical truth. If he waited for the ball to land in his sweet spot, one specific cell right in the middle, he would bat 400. That is a legendary number, but if he got impatient, if he swung at a pitch just 2 inches lower in the corner of the zone, his average dropped drastically. He became just another average player. So, do you know what he did to become the best? He just stood there. He waited. He let the bad pitches fly by, even when the crowd booed him. Investing is the greatest business in the world because it is a no-called strike game. In baseball, if the pitcher throws 3 good pitches and you don't swing, you're out. You go sit on the bench. But in the market, I don't have to swing. The market throws prices at me all day long. General Motors at 38, Coca-Cola at 60, Apple at 150. The crowd screams at me. They shout, "Swing, you bum! Buy something! Don't just sit there!" But I don't have to do a thing. I can stand there with my bat on my shoulder for 6 months, even 2 years. And there is no penalty for waiting. I only have to swing when the pitch is fat, slow, and right in the middle of my sweet spot. The problem is, most people can't handle the boredom. They have what I call a temperament defect. They feel an itch. They see their neighbor making money on some speculative coin or a flying tech stock, and they think, I'm missing the party. I've seen very smart people with IQs of 160, destroy their wealth because they couldn't sit still. You see, investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing. I often tell college students that they would be better investors if I gave them a punch card with only 20 slots in it. These 20 slots represent all the investments they get to make in their entire lifetime. That's it. Once you punch out the 20th hole, you can never buy another asset again. If you played by those rules, you wouldn't buy a stock just because you heard a tip at a cocktail party. You wouldn't sell just because the price dropped 10% on a Tuesday. You would think deeply. You would be patient. And you would become very, very rich. Consider a farm. If I bought a farm 30 miles outside of town, I would look at the soil. I would look at the crops. I would calculate how much corn it can produce over the next 10 years. I would not expect a man to run out of the woods every morning screaming a new price at me. "Hey, Warren, your farm is worth 10% less today." Or, Hey, it's worth 20% more. If a crazy person did that, I would ignore him. I would focus on the corn. But in the stock market, that crazy person has a name. We call him Mr. Market. And millions of people let this manic depressive stranger dictate how they feel about their money. When I bought shares of Coca-Cola or American Express, I didn't look at the ticker tape. I looked at the business. I knew that if the business did well, the stock would eventually follow. I learned that lethargy, bordering on sloth, remains the cornerstone of my investment style. Big money is never made in the buying or the selling. It is made in the waiting. It's like a snowball. I started building my little snowball a very long time ago. If you have a snowball rolling down a hill that's wet and very long, the worst thing you can do is keep stopping it to measure how big it is, or trying to push it faster. You might break it. You just have to let it roll. You have to let time do the heavy lifting for you. Compound interest is the eighth wonder of the world, but it is a very shy worker. It hates interruption. If you interrupt it with fees and taxes and panic selling, it stops working. So, I want you to look at your behavior today. Are you acting like the frantic trader glued to the screen, trying to predict what the Federal Reserve will do next week? Or are you acting like the owner of the farm? You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. You need to be able to sit in a room alone and be happy with your own logic. Activity is not insight. Motion is not progress. And noise is not information. If you want to do better in the market, stop trying to be the smartest person in the room. Stop trying to jump over 7-foot bars. Look for the 1-foot bars you can step over and then wait. Go find a comfortable chair, sit down, and take a nap.